This morning, the Chief Financial Officer for the Santander Sugar Group, Andres Ayo, announced that Santander is no longer interested in the $12 million loan from the Social Security Board. Since Love News broke the story that SSB had agreed to lend Santander the $12 million at an interest rate of 7% last week Thursday, the matter has garnered much attention, mainly negative feedback from several parties including the opposition, the People's United Party, Belize Progressive Party, Belize Youth Movement, and the National Trade Union Congress of Belize. They originally planned to have the SSB to be one of the many participants in a syndicated loan, but since the news hit the airwaves, Ayo believes that it has taken a political tone in nature and not an economic tone, something that he desired. Ayo announced that due to the politics surrounding the matter, that has been converted into a controversial financial contract, Santander Sugar Group has decided to cancel the loan agreement with SSB and source the needed funds from an international entity.
How this loan is structured, it's structured so that 60% of the total investment is a loan and the other 40% is investor capital or equity that has come into Belize and is already in place. Under international financial standards, a loan that is 60% part of the investment and the other 40% equity is considered a safe loan. Under most standards, debt to equity tends to be a little higher, so this is considered a safe transaction. The syndicated loan subscription was closed last year in July. In the last minute, one of the foreign banks restructured itself and had to pull out due to regulatory reasons. The reason is that the new entity they created was no longer allowed to lend to Belize by their regulator, so they had to pull out. With that gap in the subscription of the loan, the investors decided to continue the construction of the loan using our own funds and to invite a new participant into the project once the project was completed, so to reduce the risk of the project. It's important to know that these types of transactions are riskier when the project is under construction, and once the project is ready, risk is strongly reduced. So at this point, our project is ready. We are already in the commissioning phase of the project, and we expect to begin crushing sugarcane within the next 3 weeks. That being said, any participant to this loan at this point in time sees their risk significantly reduced. Due to this, it saddens us to say that this issue was politicized and it's been given a negative connotation. And due to this negative media coverage, we decided to actually use another lender, an international lender, to cover that participation. We have already proceeded to inform Social Security Board that we will be covering the funds from another source.
Ayo says that out of the 900 workers, 700 are Belizeans, for which they have paid over $3 million in Social Security contributions and taxes. With Santander Sugar Group canceling its loan application, did the Belizean economy lose out on what could have been great benefits?
We hope that these issues can go beyond the politics around it, and that we can see that these are safe and sound transactions that will provide a big benefit for the Social Security beneficiaries, and that this is the way where a group like ours can contribute to economic development of the whole country. This project is an investment that is over $150 million US. Okay? Right now, as it's currently structured, 60% of that comes from debt and 40% comes from investor equity. All of the money has been put into the project already. Like I said, this project is already ready to begin operations. The collateral of this transaction are all the assets of the transaction. That means lands, crops, factory assets, and vehicles, everything that has been put into this project. The last valuation of those assets stands at 160 million US, covering a loan that is 95 million US. That's why I say your loan to value, it's a term that it's a financial term that means how much of the value is being covered by the loan, is 60%. This is a very safe investment in the sense that the risk is really mitigated on the value that is that is serving as collateral for the loan.
Ayo did assert that this is not the end of the financial relationship they have with the Social Security Board, as the door to other financial ventures has been kept open.
I think the opportunity is still there. I mean, first of all, we're doing in the next couple of months this extra round of investment. The doors are still open. We will apply again for those funds. Like I say, we remain committed to offering these returns. I think it's a sound investment. I think it's something that the public and the Social Security should take a very close look at. It's a good opportunity. It's a safe opportunity. The financials of it are there. And I think I share your view on how we need to look at this. I mean, we really need to get a vision on how we want this development to happen for the country. And I think that having the Social Security on board and have a better return on their money provides more certainty to future pensioners and retirees on how the Social Security is gonna provide for them. I mean, none of these funds can survive if they don't have good returns. So I think I invite the Social Security to take a good look at this and to participate, because I think it'll be mutually beneficial.
Ayo clarified that the Santander Sugar Group is in no way affiliated with the Santander Financial Group from Spain. In less than a month, Santander Sugar Group is expected to officially commence the production of sugar for export, as explained by the company's CFO, Andres Ayo.
The factory right now is ready. Construction is finalized, and we are in the commissioning phase. Commissioning is pretty much testing all the equipment, clearing all the pipes and the ducts, making sure the factory is ready for crushing. We expect, if the weather allows, for us to begin the crushing season within the next 3 weeks. The cane fields are there. This year we have a partial harvest that serves simply to test the factory and to make sure that we can process sugar correctly. Next year we will have a full harvest, and we expect to crush 800,000 tons of sugarcane, produce about 80,000 tons of sugar, and about 50,000 tons of molasses, and put energy into the grid. We're also setting up something really special, because what we're doing here, and this is said by the consultants, is what will be one of the most efficient sugar operations in the world. This operation is going to put Belize in the map as one of the most efficient countries at sugar production in the world. And all eyes of international lenders and other agro-industrial developers are right now on Belize, that have begun to look at this country as an opportunity to invest. And that is something that we really need.
Ayo told the media they already have orders to export sugar to the European market. As we mentioned, since the news broke that SSB will be facilitating Santander with a $12 million loan, several entities voiced their displeasure. The National Trade Union Congress of Belize, NTUCB, the People's United Party, PUP, and the BPP, the Belize Progressive Party, among others, have all said no to the loan, citing several reasons. One of those reasons is the risk. Santander's chief financial official, Andres Ayo, told the media today, in this case, there was no risk.
The legal entity doesn't have a track record, of course, because it's a new company. The investors around this have over 30 years experience in the sugar industry. We in Guatemala are the largest sugarcane producers in the country. Our operations in Guatemala. We also have palm oil operations that are agro-industrial. One of our board members served in one of the most important sugar mills of the region. We have two investors that were top management at the second most efficient sugar mill in the region. We brought in the leading engineer and consultant for the design and development of the sugar mill that has developed the industry in all of Latin America. So the know-how is there, and that's part of what the technical and financial due diligence that took place by independent foreign consultants, world-class foreign consultants, found that the know-how and the capacity to execute this project is there. And a proof of that is that our project was built on time, on schedule. It's there, it's a real thing, you can go see it. And we look forward to having a media day with you so you can come see the factory once it's operational. At this point in time, we are in commissioning, which means we are starting the factory to get it ready to crush cane. At that, like I said, most of these transactions are riskier when they are being built. The risk of execution of these transactions is what is really looked at by banks or by international lenders when they try to determine the risk profile of the project. At this point in time, that risk is completely mitigated because the project is ready. So I think that should allay some of the fears on the risk side of it, and also you should be able to know that the value of the collateral is much higher than the loan. So if anything should go wrong, collecting the money should be very easy, as this is a completely integrated operations.